All of the S&P 500 is adopting AI like mad.
AI stocks continue to see the biggest gains in the market, but that growth is just getting started.
Huge wave of things going on in these companies that we haven't even thought of yet. And importantly, the companies that are already here that are going to do new things with AI.
Rob Spivey and Professor Joel Litman with Altimetry Research share a list of 3 AI stocks with incredible growth still ahead.
This is a really, really profitable business that is about to take off from AI.
AI isn't just on your computer. It's not just ChatGPT. It's literally getting integrated into everything.
What do you think is happening to the S&P 500 for this? It's going to drive the entire market.
Don't miss these 3 AI stocks with massive upside and how you can play them for the biggest long-term profit. Let's dive in. Rob and Joel, so great to have you on the show today, talking about really the topic that everyone is talking about right now, and that is AI. We're seeing this huge resurgence in AI stocks again. And I think everyone's question right now is, can this continue? Are we going to reach that bubble? That's the fear we hear all the time. Would love to hear from both of you on your thoughts on why are we seeing such an explosion in AI right now? And kind of, is there more room to climb in this sector?
We believe so. This is the best analogy to compare it to is like the PC.com internet kind of boom from call it 92, 93 to 2000 and beyond. And at the time, if you recall, there was a dot-com industry. There were internet companies. And you're like, wait a second. People realized that by 97, 98, they're like, wait a second, all companies have to be on the internet or they're dead. It's funny because our employees have said to us, "Am I going to lose my job to AI?" And I said, "No, but I guarantee you will lose your job to someone using AI." And that's what we're seeing with companies. I mean, people talk about Nvidia and AMD and other AI enabling companies, but the fact is, all of the S&P 500 is adopting AI like mad in ways each day people had never thought of, and to both improve revenue and revenue mix and also improve costs. So now we think we're still in the earlier innings of the AI boom, and this market's got a long way to go because there's so many efficiencies and so much productivity that can be pulled from AI, much like if this were still honestly 95, 96.
Yeah, and just to add context to that, I mean, so Bridget, when you think about it, there are companies building data centers that are literally looking out 7 years for access to power capacity. And if you have companies that are looking out that far, that just tells you that everybody understands this is a long, long, long tail. To Joel's point, where we are seeing the kind of investment in hard assets to build out the AI ecosystem that we haven't seen since the 1990s. And then on top of that, to Joel's point, we're just getting into what we call the AI users, the people who are building AI solutions. Like, you saw Amazon pop up, you get the pets.coms and you get the Amazons. But when the Amazons take off, that's what we're barely just getting there, to Joel's point. We're in the early innings.
To think this is a bubble like 2000 was, like the dot-com bubble, we may get there, but we're several years away before we hit that, and a lot of room for the market to grow between now and then.
And the impact that AI has already had on the market is incredible. Investors have made so many huge gains, like you said, like we haven't seen since that dot-com phase of life. But this seems even bigger. I think that investors are wondering how much more impact could it have. If people who bought into Nvidia 5 years ago are looking at how much they've grown their portfolios in the 5 years of Nvidia's, skyrocketing growth, how much more could potentially come?
We won't make a bet specifically on Nvidia because that's everyone. There's so much craze into it, and there's just a lot built in the stock. I'm not saying it still doesn't have upside, but when you start going to the enablers and the derivatives who are enabling AI to happen, that a lot of the market just hasn't focused on yet. There's a tremendous upside, and those are some of the stocks that we really like. Some of them are big players that you would know, and others are smaller ones that are the enablers behind the scenes.
Of course, we mentioned NVIDIA because that's the name everybody thinks of within AI, but I think we're so early in this cycle yet that it seems possible that there could be names we haven't even heard of yet that could become some of the larger players in AI. Are we seeing or predicting some of that in the market?
Oh yeah, I mean, this comes back to the idea of, first off, if you think about the 1990s as that analogy, you think about how many of the companies that we think of as the heart of the internet boom that did not exist in 1997, right? Amazon, I think, went public in, 97, 98, 99. You think about, countless other companies, that literally didn't exist. eBay literally appeared out of nowhere in the late 1990s and then became, the most successful venture capital investment of all times. And we're going to see a lot of companies like that. And the other thing is, there are companies that are going to be at the heart of the tech side of what's going on in AI that people aren't talking about too. I think of this company, Cerebras, which what they do is really fascinating. Everybody's obsessed with Nvidia now. Well, what Cerebras does is they literally make a chip, a chip that is the size of a whole entire wafer. And that whole entire wafer chip, the whole entire idea is you put the entire large language model on that chip and it can do all the computation and everything in one place. We're basically going backwards from, in the 1970s, everything was on a mainframe. And then we figured out how PCs worked in microprocessors. Well, now it feels like we're going to go back there. And it's technology like that that people aren't talking about. That means, whether or not NVIDIA is going to be the winner, there's going to be so many other things that are going on. We're going to have these custom solutions that are built for the tech for AI, but also there's going to be a huge wave of things going on in these companies that we haven't even thought of yet that are going to be enabling AI. And importantly, the companies that are already here that are going to do new things with AI, which to Joel's point is this idea of the users are going to be a huge center of this. That means we've got this this blast zone that's going to keep on going and going and going.
If I think about it, like just within our own company, we've got about 150 people inside our firm. It's not that everyone's using ChatGPT or using Grok 3.
Mhm.
Like if I go to one team, I'll say, what's your favorite AI tool right now? And they'll name something I've never heard of in my life. Like I was like, I've never heard of it. And then I go to a different team, that's doing more copywriting or more of a writing, whatever. And they're like, and they're using three tools that I've literally never heard of. That I was like, I don't know what those are. I'm like, oh yeah, this is actually best for what we're doing. And then the coders and developers, they're using other AI tools that I've never heard of. So we're seeing that happen and coming up on a think of it on a microcosm of just our own little tiny firm. What do you think's happening with the S&P 500? That on a giant scale, and those are the kinds of stocks that we're looking for that we really like.
I know we are going to get into the specifics today of three AI stocks that have a big runway for tremendous growth ahead yet. But before we dive into those three names, I do want to share a link here for Joel and Rob's unique strategy for playing a few of these really big, tried and true investments and turning them into massive gains over time. Joel, I know you have a great personal example of how this strategy has really paid off, even in your own family. We're going to get to that much later on in the video. But first, let's get right to this list of three AI stocks that have tremendous growth potential ahead yet. Rob, what's that first company on your list?
Yeah, of course. And the first one, I mean, all these are companies, you probably have heard of them, but you don't quite understand what's going on with AI. And the first one we're going to talk about is Adobe. Adobe for AI is actually there's a perfect analogy that also comes from Adobe. Everybody who may remember back in the 1990s, Adobe created PDFs. And when PDFs were created, everybody said, guess what? This is the death of paper. Paper is done because we now have PDFs. And what happened? PDFs actually meant we used more paper because now it's easier to actually share more documents. Well, everybody's worried about Adobe right now because they think Adobe is under threat because everybody can create images now with, DALL-E and ChatGPT and Grok and Gemini and everything else. And what they're not realizing is if you create more images, you need to actually clean up and actually improve and optimize and manage those even more images. And that's what Adobe does. Adobe's at the point now where they actually just in the last year doubled the amount of their revenue that purely comes from AI and AI-driven stuff. And that doesn't even get into the other half of Adobe's business, which is all called business analytics. And this business analytics part of the business on internet businesses, you think about the ways that you can leverage AI to optimize and improve that, and it takes off. And that's why when we look at it in our framework, we see a company, Adobe, that people think has a 16% return on assets, the profitability of a business. We see a 66% return on asset business. This is a really, really profitable business that is about to take off from AI, not be under threat from it.
Yeah, this is a company that many people are familiar with, like you said, but it's not one that's making a lot of headlines related to AI. Interesting that you say that AI is going to help this business grow even more. I'm curious what analysts are saying or what you're predicting as far as how much growth Adobe could have.
Yeah, I mean, this is a company that if you look at the stock price, a lot of people have thought, oh no, it's under pressure. What they call ARR, which is basically their annual revenue run rate across every single part of their business from what they call Creative Cloud, which is all the stuff related to images and graphic design and everything else, has been growing double digits in the last year as people have been worried about that coming under pressure. And it's forecast to grow significantly more. On top of that, when we look at the analytics part of their business, it's growing high double digits. We're seeing this, and this is the important thing to your point, Bridget. It's people are thinking that this is a company under threat from AI, and they're actually doing great things AI first. They've got tools in terms of PDF AI readers, graphic tools that basically are better than DALL-E for those who want to pay for it. that are specifically focused on that are using AI and AI first. And all these things is why, like I said, they literally in the last, I think it's actually last 6 months, not even the last year, have seen their AI first revenue double. It's in the hundreds of millions of dollars at this point.
A really great first company to talk about, and one that helps us bring you these videos every day on this channel because we use Adobe Premiere. We're very familiar with this company, so I love bringing that one up. Let's go on to the second company on your list.
Yeah, and the second one is another one that you've heard the name, and many of you probably are familiar with it, but you don't realize how important AI is going to be to its future, and that's Qualcomm. So Qualcomm, everybody thinks in terms of cell phones and thinks about it in terms of a legacy business. And if you know Qualcomm well, what you immediately think is Apple. And you think, well, they're about to lose $7 billion of revenue from Apple by 2027 because Apple has finally gotten through all the lawsuits that they and Qualcomm had against each other. What you don't realize is the real story with Qualcomm is edge AI. So what's going to happen over the next few years, and you're seeing this happen more and more, is more of the actual compute power that happens to solve AI is going to happen right here on your phone. It's not going to happen in the data center because they're trying to push it that things happen faster. You're already seeing this happen with autos in the Internet of Things, which is 25% of Qualcomm's business now, and is going to be 50% of Qualcomm's business in the next few years. And the next big move is as people embrace using Snapdragon and their chips, Qualcomm's chips, to be able to do what's called inference, right? Actually using the AI models as opposed to training them on your phone on the edge as opposed to having to send it all back to a data center in Palo Alto or somewhere else.
A really interesting company, and also crazy to think about how fast this AI technology could change, that we could move from data centers to your phone. There's so many developments happening in this field that it's exciting to think about what it could mean for different companies like Qualcomm. Any thoughts for our investors here about how much growth this company could see?
Yeah, and this is the thing that's interesting, right? Is when you look at this company right now, because of the overhang with Apple, people are thinking that this company is going to have flat revenue. You look underneath the hood, their auto business alone grew in the 30% rate in the last quarter, and also their Internet of Things business, which is think about using their chips in things like refrigerators, and things like Roombas, right? And also for the things that are going to happen for AI, had I think it was 50% growth in the last quarter, and the quarter before that they had high double-digit growth also. And even the actual handset business, people don't realize, grew double digits in the last quarter.
I had a student do a presentation on Qualcomm, one of my executive MBA programs, and he got up in front of the class. And at the beginning, no one knew what he was going to. He was talking about Qualcomm, and he had a big briefcase, and he pulled out 14 devices, different brands, tablets, you name it. And he said, "What is the common thing between all these devices?" And no one had an answer. He goes, "Every single one of these devices is paying Qualcomm to have their chip in here," and everyone was like astounded because no one thought that Qualcomm would be in all those, and it was a really interesting. The ubiquity of Qualcomm in the Internet of Things and in AI also is just amazing.
Yeah, I think it's incredible that those examples of bringing out 14 things and all having Qualcomm. Also, Rob, you talking about the cars, the refrigerators. AI isn't just on your computer. It's not just ChatGPT. It's literally getting integrated into everything out there, into every company and every product we buy these days. So that just shows, again, how much growth is still to come in this field. So, really great example, really great company. I want to move on to this last company on your list because it's a big one, but also has so much room to grow because of all the reasons we just said.
Exactly, right? And this one is everybody's going to say, well, this company has been in the center of AI, but Alphabet, Google, right? I mean, you look at this company and people don't comprehend Google's first AI moment happened a decade ago. Right, they and Meta were the first people to really figure out how to do machine learning and generative AI to actually power their businesses, and so they have a deep, deep knowledge here. And so everybody thinks that they're behind ChatGPT, OpenAI, and Microsoft. They are right in parallel with it, and they are just starting to see the revenue opportunities pick up for this business. I mean, this is a company that has beaten revenue in 4 of the last 5 quarters and EPS every single quarter for the last 5 quarters. And their return on assets, how we look at it, is so strong for this business. And the market just isn't recognizing just how much this company is an AI engine, first and foremost, with the data that it has from YouTube to the knowledge that it has. And I mean, and Joel, I mean, we live it, right? Every single day in terms of what we use for Google, right?
Yeah, again, it's everyone talks about ChatGPT or they talk about Grok 3, but our team has been using Notebook LM, which is a Gemini product. It's these other Gemini tools, so maybe people aren't going, I'll go to Gemini versus ChatGPT. But when you start getting the business tools I mean, it's changed knowledge sharing in our company to be able to use Notebook LM and to have our own content, basically building our own mini LMs, but with content that you can't find on the internet that we have that we want to put in, but then we want our analyst teams to be able to go and attack. So I know I keep using us as an example, but I think we're probably not even the best example. We're just saying this is just happening daily at our firm. What do you think is happening to the S&P 500 for this? It's going to drive the entire market.
Yeah, if you're seeing it in your own company, you know that every other company in the world is also seeing similar integrations of AI into their own business, which means huge implications for Google. I think the question that investors have around Alphabet is the same they have of Nvidia. Is this company is already so big? It's already a giant company. How much bigger could Google possibly get?
And this is what's so exciting about, about Alphabet when you look at it. On an as reported basis, they've got a 20 times PE, which still isn't expensive. When we clean up the accounting and look at it from a uniform accounting basis, how we look at companies, we see that it's actually even cheaper. It's a 17 times PE. So when you think about it for, an Nvidia, for Nvidia, they, effectively, Jensen and the team needs to see uniform earnings, how we look at things, double in the next couple of years to possibly justify existing valuations. Alphabet, they're printing so much money already, even before people truly understand how they can monetize AI and all the things that they're doing. The market's not even paying for the earnings they're already generating. And that's what's so exciting about Alphabet is Alphabet has the potential to not be a $2 trillion company, but a 3, 4, 5 trillion, because they can get so much bigger. And this is the idea. We always joke about this idea that Amazon, we always say, their TAM is global GDP. Well, Alphabet's TAM is effectively global computing. There's a lot more room to run for Alphabet from a valuation perspective alone, let alone how much they have the opportunity to grow their earnings because of all the stuff that we just talked about.
Relatively speaking, Alphabet stock price is cheap right now. It's actually cheap.
I love that take and also exciting because earnings right now, we're right in the middle of this earnings season. Excited to see all of the results coming out. If that trend continues, Joel, I imagine it probably will.
Well, this is our concern. I mean, for our investors and our clients, our concern is they get caught up in individual stocks and they miss the big picture. Qualcomm's the best example. So I'm gonna pull the rug out from a friend of mine who's a very sharp. He's a partner, one of the big four consulting firms, and he told me not long ago. He said, "Hey, Qualcomm, I made a ton of money on that stock." And I said, "Really?" And I said, "Yes." He goes, he said, "I bought it here, and this is several years ago, and it went up 60%, and then I sold it, and I made 60%." I said, "On how much?" He said, 200 grand. I said, "Impressive. So you made $120,000 in one trade in about 9 months." He said, "Yes." And I said to him, "Where'd you get the money?" And he goes, "What do you mean?" I said, "You put $200,000 at Qualcomm. Where'd you get the money?" He goes, "Well, some from my savings account." And I said, "How long had it been in there?" And he said, "Well, it was from some bonuses from, years ago." And I said, "So call it 5 years?" He was like, "Yes." And then I said, "And when was this trade finished?" He was like, "About 4 years ago." So I said, "So let me get this straight. You made 60% of your money on one trade, but that 200 grand and then the gain you had literally sat in a savings account for the 4 years before and the 4 years after." And he said, "Yeah." And I said, "You realize the stock market went up about 150, 60% during that time frame?" Meaning he got the tree right, but the entire forest, got burnt because he missed the proper allocation. This is what we're concerned with that right now. And we talked about this earlier, Bridget, which is um, my mother's investing, and my father would chase stocks like this all the time and miss the big picture. And because of it, I mean, it was akin to gambling, and he lost. I'm going to tell you, my father lost millions of dollars. Whereas my mother, when they got divorced, he left her with almost nothing at the divorce, and she said, "Well, you know what I'm going to do? I'm just going to invest in the market over long periods of time." So she put her money into just three stocks, essentially three stock groups, but really three stocks. And she's done very, very, very well. By the way, the dot-com boom, she didn't get caught up trying to beat the market. She just invested through it through the 90s. And then when the market collapsed, she kept investing through the collapse. 9/11 happened, and she kept investing through that. And so she hasn't stopped. Well, who do you think's done better? My mother or my father from an investing standpoint, right? And the individual. So I worry that when we get into these individual stock ideas, people get caught up thinking that and they miss the asset allocation. and they miss the 3 stocks that really you can allocate your entire portfolio on. And then when you say, "Okay, I'd like to buy a little Google or a little Qualcomm or something," you move from that as opposed to sitting in cash or sitting in something else, which is, losing money over longer periods of time because they're afraid of the market.
Really, it's a fairly simple, straightforward concept, but it's not the investing advice you'll get from every advisor out there or even from AI, where a lot of retail investors, a lot of investors in general are getting their advice from right now.
You know, what you realize is that even in the early I started in public accounting in '91, and even back then, you could already see that over long periods of time, you only really need these 3 allocations. A lot of financial advisors, you go to them and they're like, they'll put you into 25 different funds, and they're trying to get this and this. And my mother was very, expeditious about this, and she just said, and we talked about it. And I said, "Ma, I think there's only one real place you need to put your money for the long term, and then you need something for kind of the midterm." And one place for the short term. And if you use those 3 stocks the way they are today, the way my mother's still using today, back from '91 when she started this. So if you think of this, she's been investing in equities for 34 years, and every single month she just buys in and buys in, buys in. So her initial returns, meaning on the stuff she put in her earliest investments, it's like well over 3,000% return on those early investments because she just let it ride. And she didn't get caught up in the moment, and she didn't caught up saying, do I need to buy Netflix or not? Or do I need to buy whatever? She just bought those 3 stocks that we talk about, allocated properly, and then she'd use that to dabble in and out of other things. But she had her asset allocation right, and that's really what, I think truly every American needs to have at least that 3 stock system first, and then they can say, "Okay, now I've got that right. Now I can take a little bit of that and put some in a Qualcomm or put some in a Google or whatever else," instead of making 60% on Qualcomm, but losing 120, 150% return over the big picture, using, this formula, this 3 stock formula.
Yeah, so interesting to end this conversation on AI, maybe not always having the right answers right now, but AI is definitely the right answer for where the market is heading and where all of the growth is going to come in these stocks. So great conversation today, Rob and Joel. Thank you so much for your time. Again, if you want to learn more about their investing strategy, you can scan the QR code right now or click the link in the description of this video to really learn more about how these long term plays pay off in the long run for your investments. Again, we've got that link for you in the description. Thanks for watching, everyone. Let us know which AI stocks you are looking at right now as major long term plays for explosive growth ahead. We'd love to hear your stock ideas in the comments too, or what you think about the 3 companies that they talked about today. Thanks for watching, and as always, happy investing.